Morning, and how are you?
I'm very well. Good to see you.
Good to see you too.
Yes, I also can see a number of guys have joined us. I'm seeing Calvin Musabe is with us here. Hi, Calvin. Hello, good morning, Calvin. All right, Edwin Kayasi is with us, and I just want to welcome you. Hi, Edwin. Edwin, can you hear me? You also have Jotham Kamau. Nicholas Tenua is here. Yeah, I just want to welcome all of you and hope that we will have a good time today. If you can hear me, just perhaps you can respond, maybe with a good morning. And let me start by just welcoming Calvin. Hi, Calvin. Calvin, can you hear me? All right, Edwin, good morning. Okay, I can see Jotham is here, Nicholas is here. Karibu sana Prudence. Welcome as well, Liz. Thanks for joining. Oh, wonderful. So Nicholas is telling me he's joining from, which city are you joining from, Nicholas? Is it Kampala? Great, thank you very much. So I'm glad to really see people joining us from even Kampala here, and a number of us as well from within the country, Kenya. And hoping that as we start in a few minutes, we will get to know a number or a few of them. To use this here. Good. I just want to know whether people can hear me. Let me start over again. Hi, Jotham. Can you hear me? Jotham, can you hear me? Yes, Jotham, I can see you've raised your hand. Can you hear me? Maybe try speaking up so that I can be able to get to hear your voice. Okay, you can unmute, then you are able to speak. All right. Great. So karibu sana Sheila. Karibu sana Abigail. I'm glad that you could join us. Welcome all. Good. Jotham, I can see you've sent me a message saying that you can hear me. I just want to see whether I can be able to hear you from that end. Can you do that? Can you say hi back? Then maybe I can get to confirm that when someone speaks from your end, I can hear you. Some quality of. Oh, great. Right. So as a number of guys are joining us, I'll just be mentioning names and welcoming you to the program. So I can see Jeremiah Mwale. Thanks, Jeremiah, for joining and for creating that time for us. Abigail, I can't hear you. Yes, I'm glad you can hear me, but I can't hear you. I'm trying to see if I can hear someone from that other side. And so if you want to speak, you can unmute the microphone, and then you say something, then I can be able to hear you from this end. Probably what I can do from this side is to allow you to talk. Let me do that by asking you to unmute. Yeah. Sami Ndungo has joined us. Thanks, Sami. Welcome on board. I can also see Susan has joined us as well. And Susan will be one of our panelists today. I can see Margaret Karimi has joined us. Thank you, Margaret, for joining. Yeah. Wonderful. So let me start over again. Hi, Jeremiah. Can you hear me?
Hello, how are you?
Very good. Now I can hear you when you speak. I don't know if you're struggling to hear, probably because nobody was unmuting their microphone. But I'm now very glad that when you speak, I can hear you. Welcome.
Asante sana. I'm representing African Nazarene University.
Great.
Yes.
How is Nazarene?
Nazarene, we are doing well, working from home.
Oh, you're working from home?
Yes.
Are you also carrying out online classes?
Yes, we are.
And how is the takeout by students?
It's at least it's busy this time round because we started classes on Monday.
Oh, this week, Monday.
Yes, yes.
That's wonderful.
Yeah.
Welcome on board.
Thank you so much.
Hi, Sammy. Sammy, can you hear me? Yeah, I can see. Yeah, Sammy. Yeah. Can you hear me, Sammy?
Hi.
Hi, Sheila. How are you?
Very well. How are you?
I'm very well. Thanks for joining.
Thanks for having us.
Where are you joining us from?
Sitam.
Oh, how is Sitam?
Sitam is doing great.
Are you also working from home?
No, we are currently in the office.
How about chat services? Are they ongoing?
Yes,
Oh, great.
we
Great.
started 2 weeks ago.
Oh, great. Thanks for joining us.
Yeah.
Wonderful.
Thank you. Thank you.
Let me hear from Edwin. Hi, Edwin. Edwin Kayasi.
Hi, how are you?
I'm very
Yes,
well.
I'm here. How are you today?
I'm very good.
Yeah, we are fine. Yes.
Better than yesterday.
Yeah,
better
we are
than
also fine.
Oh, good.
That's great. Yeah.
Where are you joining us from?
I'm joining you from Sitam.
Oh, from Sitam. Wonderful. Karibu sana.
Asante.
Great. Prudence Gaki. Hi, Prudence. Prudence, can you hear me? Great. All right. So I think we can, you're right on time. And thanks everybody for creating the time to join us today. I'm very glad that you could find this opportunity and spend it with us. And so has the number of, as we still look forward to many other guys joining us, I think it's just that moment I would like us to kick this up. Yeah. All right. Karibu sana, Anne. I can see Anne Malinda is here as well. Thanks for finding the time to join. I can see Godwin Mwangi. Thanks, Godwin, for joining us. I can also see Simon Munyui. Thank you, Simon, for joining us as well. Good. So, in terms of how this is structured, we have a 1 hour interaction where the presenters will present, we'll make the presentations, and then we'll have a session of question and answer. And I'm hoping that all our areas of concern and places that you desire to get to learn, you'll be able to get the knowledge you need. Plus, if something is not clear, you are free to ask any questions. And so let me begin by greeting everybody by saying good morning and welcome to today's webinar. I have the pleasure of welcoming you today. My name is Okendo Frederick, and I will be your host for today, together with my colleague, Polycarp Chege. Thanks for creating the time to be part of this webinar today, and I believe this shall be a worthwhile endeavor for you and all of us. KGCO East Africa is an independent member of firm of DFK International. And DFK International is an umbrella body of professional services firms covering accounting, audit, tax, legal, and business advisory services. DFK International has over 220 members firms in more than 90 countries worldwide, and has been helping member firms provide cross-border services for the last 60 years. Regionally, DFK exists in Americas, Asia, Pacific, and Europe, Middle East, and Africa. And so KKC East Africa is one of the African countries that is an independent member firm of DFK International. Again, we also have member firms from Uganda, from Nigeria, from Morocco, and other parts of African countries. As part of our involvement in the wider network of DFK International, we have partnered with DFK Uganda, which is represented by JP Magson, to provide a view on risk from the East African perspective with a cross-border standpoint. The managing partner of JP Magson, who is CPA James Musabe from Uganda, shall be sharing with us his experiences in fraud investigations in a short while. So stay tuned to be able to just get to grab a few insights from him as well. And so in terms of just introducing the webinar and the rationale of why we chose the topic that we have, mitigating against fraud risk. According to PASGAR is Partnerships for African Social and Governance Research, and just one of the sources that from my own research, it is estimated that Kenya has been losing an average of 40 billion Kenya shillings. That's roughly $400,000 every year through illicit financial flows since 2011. Of course, this is distributable partly to government, local firms, and multinationals who engage in fraudulent schemes. And part of the reasons certainly is to avoid tax. We all know that tax avoidance is not illegal. Tax evasion is what is illegal. In essence, this is a multi-billion shilling, or rather multi-billion dollar enterprise, which should be given attention that it deserves. This therefore is the premise to why we have decided to carry out a webinar on mitigating against fraud risk. Our aim is to enable business owners and key stakeholders in these businesses to employ measures that mitigate against these vices, and more especially during a crisis of whatever kind, that is COVID-19 included. So stay tuned, listen in, and ask questions. If you have any questions, please use the Q&A button at the bottom of your screen, and a panelist shall respond ASAP. I also encourage you to use the raise your hand button during the Q&A session, which will be at the end of the webinar. We hope to address your concerns with utmost tactfulness through our seasoned panelists. In terms of introducing our panelists, like I mentioned, we have 3 panelists. That is CPA James Musabe, CPA Joshua Oweru, CPA Susan Asere, and we also have our partner Liz Matimu, who will be standby to respond to any matters of concern as they may arise. And so at this juncture, allow me to just introduce the panelists as they'll be coming on board. We will start with Joshua Gashomo. Joshua Gashomo is a member of ISPAC and has over 15 years experience in the industry of accounting, audit, and tax. He is currently a director, audit and assurance at KKC East Africa. Joshua holds a bachelor's degree in education, specifically economics from Kenyatta University. And he has a wealth of knowledge that he will be sharing with us just in a short while. Moving on to James Musabe. He is also a CPA from Uganda, and he's currently a managing partner at JP Magson, like I mentioned a while ago. He is an experienced practicing accountant with both business, industry, and public practice experience. James is a member of the Institute of Certified Public Accountants of Uganda and an associate member of the Association of Certified Fraud Examiners. At JP Maxon, James assessed clients in prevention, detection, and response to fraud by conducting fraud risk assessments, investigations, and even development of ethics and integrity compliance programs, in addition to statutory and project audits. He brings over 20 years of experience, both nationally and globally, conducting audits, investigations, consulting, and even providing fraud risk management advisory services. CPA Susan Asere also is a person of really great and has wealth of experience in the risk environment. She's currently serving in the capacity of audit manager at KTC East Africa. She also holds a bachelor's of business management from Moi University. She is a certified public accountant and a member of the institute, that is the ISPAC Institute. Also a member of CIFA, that is Certified Institute of Systems Audits. In terms of just a short introduction of our partner, Liz Matimu, she's currently in charge of risk and advisory. And so you notice that the team that is going to handle this is a team that is well knowledgeable and has traversed the area of risk management. In the course of this presentation, we shall be uploading a poll that enables us to improve on the webinar presentation and even the contents. Kindly feel free to make your contribution by clicking a response that best fit your opinion, even as we be going along. And so at this juncture, I would like to welcome CPA Joshua Waweru to kickstart and take us through the first session. Welcome, Joshua.
Thank you, Fred Okedo, for that introduction.
Thank you very much. You can just raise your voice a little bit. I'm pretty sure we will be able to hear you well.
Yes, good morning, everyone, and thank you, Fred Okedo, for this introduction. In the course of my presentation, I'll be asking CPA Polycarp to share the slides on the screen. And I want to thank you all for joining us in this webinar to further look at this area of the fraud risk. And largely, this being the season of COVID-19, we thought it wise actually to share our experiences as regards this particular subject. And thank you for the introduction and thank you for the welcoming notes that you have already done. Again, as you look at this broader topic of the threat of opportunistic fraud risk during COVID-19, we are well aware of the current economic situation that we find ourselves into, largely occasioned by the threat of COVID-19. And I would begin by an introduction and outline that within the various sectors that we operate within the economy, many entities are experiencing a lot of strain and a lot of pressure coming in because of the current economic situation. Again, highlighted or coming in because of COVID-19. And some of the things that you'll notice, there are some economic risk, and you find there is significant reduction in trading. I don't know of many entities that have increased trading, especially during this season. And significantly, many entities as represented here, whether they are NGOs, whether they are corporates, whether they are churches, as some members have introduced, there is reduction in terms of economic activities, significantly reducing the trading, loss of revenue, loss in terms of profits, or what other people call bottom lines. There is a loss in the market demand. There is the threat or the risk of going concern, looking at the ability to exist in the foreseeable future. And this again is becoming a big issue. Will we be there? Are we going to operate in the next 1 year, in the next 12 months? And there is all those concerns. There is the issue of liquidity. Again, looking at the broader aspect of our cash flows? Are we in a position to maintain liquidity? Can we be able to pay, especially our short-term obligations when they fall due? And there is loss of key donors. Significantly, we have all these threats. We have been told in the news, we are likely to lose the global fund. We are likely to lose some funds from other major donors within the country. Again, telling us about the threat that we have. And this is basically the season. This is basically the environment in which we find ourselves operating as a country, as a region. And again, this is not specific to Kenya. It is again not uniform or just affecting us. It is a global issue. And we fight this economic risk that are reduced reading to a number of areas. And some of this is what we shall be highlighting in our presentation today. And there is manipulation of financial results, misrepresentation of facts, misappropriation of assets and other fraud schemes. And this is what will be emanating as the outcome of this economic crisis that we find ourselves into. And so individuals and entities will find themselves working around what are these threats in terms of manipulations, misrepresentation, and misappropriations. And again, looking at this is that there are some common types of fraud that you'll find within your organization. And we'd like to do just a simple poll, again, that will be conducted by Polycarp on this area. And the question we're asking you is, which is the most common type of fraud your organization has experienced in the last 5 years? And we have some answers there: fixed asset misappropriation, cash fraud, there is a bank fraud, customer fraud, supplier fraud, other, or even not applicable. And we're asking you to give your honest opinion on this. Again, we request that you just click on the answer that you feel, even as we move on. And the question there is on the screen. Which is the most common type of fraud your organization has experienced in the last 5 years? I don't know whether that is taken.
Yes, that is taken. I have at least 67% voting have voted, and I think maybe that would be enough for maybe making an opinion or analysis. So maybe let me just share the results on the screen. Yeah. I'm sure it's now you can see this, people can see the results. Yeah, so it's showing that cash fraud is topping at 39%, followed by fixed asset misappropriation and supplier fraud coming at 13%, and bank fraud coming at 4%. We also have customer fraud coming at 4%, and individuals saying not applicable to them is 26%. So basically, cash fraud is at 39%.
That is taken. Again, largely representing what is expected within this system. Again, most fraud occurring at the cash level and less at the asset level, a very good representative in terms of the fraud. Even the supplier's fraud, again, representing the bottom line, what we all experience. But on the matters of cash, high risk of vulnerability in terms of fraud. I think we could move on. Yes, and again, you noticed in our introduction, we have mentioned the pressure, and there is increased pressure in terms of the COVID-19. And some of the things that you notice is that there is the pressure coming from all quarters. And I would be outlining just a few of these. There's the pressure to keep an entity as a going concern, as I outlined. When this pressure comes in, somebody within the management is being asked by the board, we must be there. How is the cash flow? Have we paid all our suppliers? Are we maintaining sales? Shall we maintain our customers? You know, are our employees going to be retrenched? Are we going to go on a 50% pay cut? These are the normal pressures that we have all experienced. And therefore, to keep us going, we experience a pressure which is a catalyst for fraud. And we have the pressure to pay dividend, the pressure to pay employees, bank and other covenants, especially the bank loans, you know, especially matters of loans that are already current, existing. And we have had these, especially within our financial sector space, where moratoriums have been applied for by various individuals, asking the banks to consider, you know, some period of moratorium. And all these pressures are coming and hitting on individuals, on organizations, or entities. And we are having the pressure that every bad news, especially reporting negative profits, you know, negative results, decrease, they are hitting us all at the same time. And we are required to report this all bad news at the same time. I'll be looking at the generic item within what we call the fraud triangle. And this basically outlines how fraud happens. And fraud happens in three fronts. And this has been tested and proved. There is always something we call the opportunity, which presents itself. In fact, if you notice that every time you'll be hearing people saying, I had no intention of doing this, had no intention of committing a fraud, it is only that an opportunity presented itself. You know, somebody gave me the money when, you know, my grandmother became sick. You know, somebody, you know, I was holding money and this happens. And so you'll find this coming in as threats. And we have the three of them: the opportunity, the pressure, and the rationalization. I'll be looking at this broadly. One is the opportunity. And you'll hear that companies are downsizing, which has an immediate effect on the internal controls. You hear about budgets are decreasing or they are cut within the budget space. Companies and organizations are doing more with the rest. And all these are leading to some opportunities for fraud. And if you look at the real issues, with increased pressure and decreased internal controls, people will always explore more opportunities to commit fraud. And this is actually common. You notice that the way we designed, or the way institutions design their internal controls, they had in mind that individuals would be working in the office and they would be with them. And you'll be seeing your authorizer, you'll be seeing the person who prepares your document, you'll be talking to them one-on-one, they'll be seeing your body language and your facial expressions on a day-to-day basis. It is usually at the design level. That's how we design internal controls to work. However, very few individuals or entities thought that at certain times like this, you would require controls that work, you know, remotely, and that you have individuals working from home and working even far away from you. And at this point then, we get pressure because we are working from home, and the internal controls in their design were working that you'll be there and you'll be seeing your boss every day. They'll be approving, authorizing, you'll be seeing their signatures even as document moves out. And so this has resulted in an opportunity to commit fraud. And so it is a threat, it's an opportunistic threat that has come in because of what we are experiencing. Looking at the pressures, as outlined earlier, you get the pressure to lay off staff, the pressure, you know, that stock prices are declining, and you find this basically, you know, hitting on institutions. There is a credit crisis. All these are pressures that are coming in. They are both internal and external. And as a result of these pressures, we find now institutions or organizations, you know, prone or vulnerable to commit fraud. And basically, the last item there is about rationalization. And everybody has been out saying, everybody is doing it. people are attempting to rationalize their actions. And they will be saying, everybody is laying off, everybody is cutting off salaries, and they rationalize their decisions. They make it to be a justifiable end. So you try to justify your actions. Even some individuals, when they have stolen, they justify that everybody is stealing. And so why would they not be there? And basically, these are the three items within the fraud triangle. And I ask that all of us mark this, the opportunity for fraud, the pressure, and the rationalization. If I can move on to the next one. I'll be quick to look at the potential financial statement fraud risk. Again, at the financial statement level, every entity, wherever church, NGO, or even a corporate, there will be requirement for financial statements. Now, the financial statements, essentially by design, they're supposed to be fair. They are supposed to represent what is, that is, and what is not, that is not. They are supposed to give us the fair representation of the state of the affairs of that particular entity. However, during COVID-19, and because of the element of fraud, you will find this potential financial statement fraud. And would urge us that this be a point of focus. One of them is the overstatement of revenue. Being on the school of thought of where individuals are coming from and what they want to achieve as a result of showing good bottom lines, you may find overstatement of revenue and a statement of expenses, especially for NGOs, to ensure that they remain going concern, they remain, the donors continue to show that they are existing. They would be finding some understatement of expenses in corporates so that they can report better profits, manipulation of valuations and impairment. You'll find restructurings, capitalization of expenses, expenses that are meant to be revenue in nature or to be expensed. You find them being capitalized in this particular period. Disclosure fraud. Now, entities are required to disclose their financial statement, everything that is attributable to the performance of the entity. Especially where we have wrong covenants that have gone, bad, you may find a lot of individuals now going for disclosure fraud, where they fail to disclose. They fail to disclose offenses within the entity. Or whatever is disclosed, again, is misrepresented. There is misrepresentation. There's margin manipulations. Again, looking at the various profitability margin ratios that we do, the various ratios that we calculate within our business. Internal controls. I do not have the time to go through this because this is broad and deep. Internal controls as a potential financial statement fraud. We have the main key element here about the segregation of duty. If I pick this as an outline, as an emphasis, you notice that during the normal working hours, we had internal controls working. You'd have one person not in charge of the preparing and paying, looking for suppliers, looking for contracts, lighting minutes, and again paying. And this again is a possible area, potential for fraud, because with working from home, you find now there is no segregation of duties, and so then this you get in as a major threat. Gradually, again, time will not allow, but there is a technology fraud. This may be the main one, where individuals will be told, click on this link, they will open, and the link take you to some documents that are there. You will not be able to go through all of them, and you approve. You are approving online, you are making payments online, you are using the technology now more than the physical processes. And again, reading or outlining a major threat. What to do? Just as a brief, restrict cash payments to strict policy guidelines. Do not allow for circumvention of internal control measures. Ensure policies and procedures are strictly adhered to. I would emphasize here and say, the absence of a physical office does not mean the presence of a circumvention of policies and controls. The control still remains. The same requirement for a document to be approved remains. For a payment to happen, a payment voucher needs to be approved. This has not been, compromised by COVID-19. The requirement, especially under audit, is that these documentations still have to be there. A document to support a transaction. An invoice remain an invoice. A delivery note remain a delivery note. A good received note remain the same. They will not change. And so ensure policies and procedures are strictly adhered to. Ensure bank reconciliations are done monthly. Again, this is to ensure that you mitigate against the fraud of cash, as even outlined within our survey, that this is a huge area. If bank recollects are not done on a monthly basis, again, it predisposes or it exposes the organization to very major risk, because they will even be done monthly, but some of them are done off the system, and you find they are manually done, and other areas where you find individuals are inserting their own things. Ensure segregation of duties is followed, and that you don't have one person who is a control in himself. You know, you get individuals who become the control. Their presence means internal controls. They let them segregate. Let individuals share roles. Let individuals share duties. Let no one, take control over the entire financial, operations. And then develop a fraud register. You can please put this up. Develop a fraud register. Yes. Okay. You can develop a fraud register. And again, this, as an emphasis, is that within the operation space that we have, one of the key things that can come out of, especially of a webinar like this, is if entities can get a risk register, and where within it they develop fraud register. Now the register just outlines any area where the organization is susceptible to risk of fraud, and then look at the mitigation measures, and then outline every department from, procurement, from HR, all the way to finance. Take all those departments, look at the possible areas of risk, and then again look at mitigation risk areas. If you could move to maybe the next areas. Within the fraud area, we have potential fraud. Now we look at this through the 3 M's, and these 3 M's is actually what we outlined in our introduction. And the first M is manipulation. Now this will require basically to alterations where people would alter records, support documents, again, occasioned by people working remotely. Some of the things that will be found here is that models and forecasts may be edited, again, to ensure that you produce some favorable results. And again, where there is some breaches of covenant or impairment, you find individuals trying to do modifications. You manipulate by modification. You manipulate by changing digital supporting documents. Again, a major risk, again, within the IT space is about digital documents. Now, one of the notable things is that when people go online, somebody will create an invoice, and they are going to duplicate this particular document. And then you must really be careful about which support document are you using. And we have had these as experiences in the past. And you find something supported, an invoice is coming in, then you look at the source of the invoice. It is supporting a procurement of water. Then you look at where is it coming from. Then you find the entity is a hardware. Then you start adding 2 + 1 and asking how does a hardware supply water, and all these, I'm talking about manipulations, you manipulate a document, changing cash flow forecast to continue as a going concern. Ensure that you portray very good position of cash, that you are good financially and you are sound and good. And again, to ensure that this happens. Failing to provide for loss-making contracts. Again, this is within the corporate space. I know about those loss-making contracts, especially within the insurance contracts, and that this is now another possibility of manipulation. Failure to impair goodwill or other intangible assets as they are required by the IFRSs, missing provisions or write-offs. When you have so many provisions or write-offs or bad debts, then you ensure that we are not going to write them off during this period. Again, it's a possible manipulation, and it's a fraud. It's an opportunistic fraud. We have capitalization. Who wants to capitalize an expense who want to expense items that they feel they can capitalize and maintain a good bottom line. You know, many individuals would go for capitalization. When they capitalize repairs and maintenance, it will ensure that the expense of repairs and maintenance is not portrayed within the income and expenditure statement, and so they report better profits. There is manipulation of ratios, there is manipulation of alternative performance measures, forecast, and all these areas within the ratios to ensure that you portray a better position. And so we say look out for manipulations, look out and watch for all these areas within the manipulation space. If I can get to the next item. Again, after covering that, we wanted to do just one more poll. And this is, again, a 1 second or 5 second thing. And it asks, what was the motivation of the party involved in fraud? And take this as a scenario where within your organization, there was fraud, and what was the motivation of the party involved in fraud? Is it, again, financial pressure? Is it greed for money? Is it lack of promotion? Is it pay cuts? Or is it other? You know, this again can be done within a short period, and I'm sure Fred Kindo will be able to share with us.
Yes, so I have, the question is right on your screen. You can respond by clicking the answer that best fits your opinion. Yes, I can see a number of people are responding, which is a good thing. So I'll give you like another 20 seconds to just complete. Yes. All right, 10 seconds. Yes. I think with a response of 70% is enough for us to be able to make a deduction. Yes, so and good. That's more than 50% people that have voted. So great. So out of the end results here, I'm just sharing the results on your screen. Yes. So just 5 more seconds. So if you haven't voted, you can vote. Good. So the screen, let me just share the poll results are here. So out of the total number of people that have responded, 60% of people are saying the motivation was due to financial pressure. 33% are saying greed for money. Yes, and I think that's well representative. So Joshua, back to you.
Thank you so much. Again, this shows the truth about the financial pressure. Again, taking the higher vote. And then again, the greed for money, which we all see, especially within the public sector space. We find the greed taking more preeminence because it's not that the individuals committing fraud, they are lacking in terms of money. They even have more, but again, it's greed. They want to accumulate and accumulate. Thank you so much. Again, we could we can move on to the next M. I'll look at misappropriation. Now, there is a risk of theft from variable marketable inventory. Again, when people want to misappropriate, you might find matters like this. Disposal of assets that have no proceeds. You hear individuals sold assets, they sold their motor vehicles, they sold other assets, but you cannot see any proceeds on disposal. Unusual write-offs of stock, especially when stock have been stolen, then in the financial statement, you find a lot of theft, and then they do write-offs because they cannot be able to justify the existence of these items. There are new suppliers that have gone through the appropriate They have not gone through the appropriate, procedures, and you'll discover that within the corporate space, and even within the NGOs and churches, individuals are required to have a list of pre-qualified suppliers. There are internal control measures that have been put in place. One of them is to ensure that those who are pre-qualified are the ones that are selected for supplies. Now you find new ones that emerged, and they were told why they were caught is because the others were locked down, or they were under lockdown, or they could not be reached. And again, this is another possible threat of misappropriation. Purchasing staff, collusions, and even inflation of prices. This will be major, and we have already seen it. We have seen a mask that costs 50 shillings going for 750 shillings, especially from a Kenyan point of view. And we have seen other major hikes within the supply chain. Payment to suppliers that are not approved. Again, intervention, even to divert payment. We have had incidences where the people who supplied are not the ones that were paid, and therefore those genuine suppliers were queued in an indefinite queue that they will never get their payment. Notable again is the threat of manipulation coming in from related parties. Or ask members to be cognizant and to be aware of this threat, where we have payment to related parties, entities that are related to us, to our businesses, either they were common shareholdings or otherwise, or they are our branches, if it's a church with various branches, and the payment that are coming in through related parties, they are not at arm's length. We say they are not complete. And so in this area, focus on misappropriation and largely on the matters of related parties, a major potential fraud during this period. I look at the last M, and this is misrepresentation. In the current environment, you'll be checking entities that misrepresent their financial statements, they misrepresent their facts. And one of the things that are common is omission. You'll find omitting information that could lead to the change of the user's views. And this is common, omission, an error of omission coming in now as fraud and coming in through misrepresentation. So that when you use a financial statement, they don't give you the true position of that particular entity. Yeah, there will be failure to disclose even covenants, loss of material contracts, failure, if a donor did not bring in the money, you'll be finding a lot of hiding of this information, misrepresentation. Missing or limited scenario analysis, again, this will be common. Concealing related party transactions, this is a common area. And again, under the International Financial Reporting Standards, these related party transactions are going to be now clear because they are going to be potential grounds for misrepresentation. Again, giving undue preeminence to alternate performance measures. Again, ensuring that people hide the true reality of the company's position. Even intentional failure to disclose matters like post-balance sheet events. What happened after the end of the year? Individuals now will be susceptible to ensure that they commit fraud by misrepresentation, non-disclosure of matters that happens after the balance sheet date. Again, I would move to the next items where I just look at key things or the red flags for fraud, even as I allow the other panelists to take in. Now, I would like us to just look at these red flags or the key things to look for. One of the things that comes out largely, even from our poll, is matters of cash. Now, when you get huge cash payments, this is a red flag for fraud. If you find entities that want to pay everything on cash, even in Kenya where we have the M-Pesa platform, and they don't want to pay participants in an NGO who are coming in for a meeting, and they are earning 5,000 shillings, or basically $50. If somebody is earning $50, but you cannot release this in an M-Pesa platform, you want to pay 1,000 people in cash, and you're paying in millions, cognizance of the policies in place, asking for payments, huge areas of fraud. Pre-signed checks. This is another ground, a fertile ground for fraud. Individuals are adding zeros on checks that are payable because the checks are already signed. And when somebody is writing for 50,000, they write 500,000 and money moves out. Check signing fraud, again, this becoming another common area of fraud, where you are told to sign checks and they are in a heap and they came on Friday and there were many, they were in their hundreds, and one of the checks, was paying to the same person, Manual bank reconciliations, another fertile ground for committing fraud, where individuals are committing fraud by ensuring that at the point of reconciliation, where you reconcile what is in the bank with what is in your cash book, to mirror the cash book with the bank, you find elements of manual items that have been posted there. They didn't come from the systems. And so again, potential ground for fraud. Journal entries in bank reconciliations. We have found this common now for years, where individuals want to reconcile a bank balance with a cash book balance, but one of the reconciling items is a journal entry, which essentially means that somebody would walk to a bank to a cashier and present a journal and get paid. Fraud areas, common fraud areas. There's impress fraud. Again, within the NGO space, there is the requirement for imprest. This is actually money that you receive in advance so that it can be liquidated later. And we have had impress lender documents that are fraudulent. They are not meeting they are not authentic, and they have no integrity. And these are support documents for individuals who spend money and they cannot be able to account for it. And so they look for anything to support, anything that can be found. Any receipt is a receipt, even coming from a mechanic for travels, a mechanic was offering travel services, items that are completely off the cuff. Absence of good received notes or stamp delivery notes, where you find goods are coming in, you're in an NGO, you're procuring some t-shirts, you're procuring for some materials, but you cannot verify that the materials came. You paid for goods, but we cannot see the goods. Especially those of us who do the financial audits, we want to verify that the goods actually came, not that you paid. We know you paid because we can see the money moved from the bank. But how do we know that the goods came that you paid for? And so we look for goods received notes or even the stamping of delivery notes. This is a potential red flag for fraud. Again, fuel fraud. Again, we have fuel that is dispensed, even looking at fuel paid and the capacities of the vehicles. And this is another potential fraud. Over the years, this is another gray area. And I would like us to look at this as a red flag. Largely because we have had instances where a 1500cc vehicle is fueled for fuel that could fit in within a truck. Somebody is traveling for a distance of 1,000 kilometers and they're spending fuel that could be spent for almost 5,000 kilometers. And this is fuel theft. Overstatement of expenses to ensure donor funds are exhausted. And again, to ensure that you use all the money that came from a donor. Overstatement of expenses, anything that just been claimed and expenses that are not authentic, not fully supported. Unusual cross association with vendors. Look at these individuals who have so close to vendors. They attend all the vendors' birthdays or their ceremonies and their customers, and they are very close. And then you look at this behavior. These are behavioral traits that again lead to some elements of fraud. Excessive controls, especially by senior staff who will never want to share roles and responsibilities. They will never want to go on leave, and they are on control. They are know-it-all. They want everything. They are the entities. They are the controls in themselves. They are named to themselves. Again, looking at this as fraud, potential for fraud. Individuals living beyond their normal means. An individual who is in the marketing department earning some few $30,000, dollars, but they are living large. They are living beyond their means. They are living abnormal lives, a life that nobody else can be able to handle. You cannot be able to audit and balance off their life within what they do. Again, marriage claims, fraud, inconsistencies. Look at this within the donor space. We have had individuals where have had marriages or travels, and we have compared this, especially within the NGO space, within the church space, And we have people traveling from Nairobi to Mombasa, a distance of 500 kilometers. When they are coming back from Mombasa to Nairobi, the distance increases to 1,000 kilometers. The load expands on their way back. And so you find this money is being claimed and mileage is being claimed. You know, the distance is increasing as you are traveling back. When you are going, you know, inconsistencies. Again, look at this as a possible potential frauds. Lastly, I look at the participant risk and the corresponding expenses. Within the NGO space, within the corporate space, individuals are now holding seminars, they are holding meetings, and then you find fraud areas. You find people coming in, 60 people like we are today, or 70 people as we are today, and we are claiming water, we are claiming some other auditable expenses, but when you look at the amount, they don't make sense. We are 20, we are 30, but we are claiming water of 100 liters per person. You know, we are claiming meals of maybe 50 kilos per person, you know, items that are not making sense. And again, looking at these as potential areas of fraud. And so these could be the quick highlights within the red flags, not keenly on the huge cash payment, pre-signing of checks, impress matters within the NGOs, within the churches, the mileage areas, the excessive controls by individuals in terms of the behavioral changes. And again, with this, it will give us an indicator of the fraud areas and key things to look for, especially in this period of COVID-19. So I think I'll take it back to Fred Okedo so that he can introduce the rest of the panelists.
So at this juncture, I'll want to allow James Musabe to share with us his experience from a Ugandan perspective. I'm pretty sure fraud is something that is really diverse, and apparently it happens in every country. So let's just hear from his experience in terms of those investigations that he has carried in the recent past. So James, back to you.
Thank you, Fred.
Yes.
My name has already been introduced. I'm James Musabe. I wouldn't go into much of it. I just want to take you through a few case studies of the fraud that we have investigated and concluded, and one that we investigated but aborted it in the middle to ensure that we are free from it. For confidentiality purpose, I will not introduce or mention the names and the locations of these entities, but I'll give the general perspective that we are able to see what actually happened with it. The first case that I want us to look at is a case that involved a petrol station and the staff. This petrol station was part of a group of companies, family-owned large group. They had enough funds, money was available, and they had their trusted staffs. Ideally, they would not publish jobs or advertise for jobs. They would do headhunting and look for people with good references, the people they can stand for. Here was a staff that had worked with them for quite a very long period. And this staff member was the poorest in the organization, poorest in courts, meaning, as Joshua said, others are living beyond their lives, but this one was actually, I think, living below his means. He was working on food. Nothing would cause the organization to suspect that maybe something is taking place with this young man. The audit, the scam was first of all opened up when this staff member missed work one day. And then a colleague was sent to debt collect one of the customers. When they reached the customer said, but we paid a long time ago. And the colleague insisted on some invoices that were not paid, and only to realize that those invoices were not actually for the organization. The organization had never received them, and they had no LPOs, approved LPOs. So the case was taken up by the organization's internal audit, which conducted the fraud investigations, completed the report, and they concluded at around $72,000 as the amount misappropriated by this staff member. We were approached to conduct an independent fraud investigation. Of course, we started our work with internal audit. Internal audit was auditing the center every month. They were conducting monthly internal audits for that particular center because it was the biggest in the organization. So we couldn't cite any report of internal audit, despite the fact that internal audit would do those reports. We requested management for copies of the internal audit report. We referred to the operations manager. The operations manager was the one supervising the center. He again couldn't locate the internal audit report. For us, all those were indicators of who is likely to be involved in the fraud, together with this staff or complicity of this staff. So we kept raising our red question marks as we were walking our journey of scoping this engagement. So finally, we resolved that something is wrong. And we dug now into the computerized system to look through what actually happened. And we concluded with around $269,429. $269,429 was the money that was missing. The question came up now, who was culpable? With our work continuing, we discovered that internal audit was part of the fraud. Very unfortunate, but it happened. That the meant to be security, the watch guard, was actually involved in the fraud. The operations manager was also involved in the fraud. Now, all of this confirmed later why we were denied copies of the internal audit reports and some management reports that we couldn't get. So the operations manager was also involved in the audit, in the fraud. So the board was disappointed. The owners were disappointed because all of these were trusted people, trusted staff, people that they would bench for and say, these ones cannot, these are our eyes. This time the eyes were closed. They are actually the eyes that were doing the wrong things. So finally, the result was that the staff was committed to jail, and the refunds were called for from his colleagues to refund part of this money. But the key thing we want to study here, or the key lessons that we want to pick up, is that the staff member who committed this fraud was the least expected in the organization, completely least expected. By his lifestyle, you do not suspect him. He was so loyal to the board members, to all managers, to all staff. The one you do send for anything and he goes for. He was the lower cadre in the organization, delivering the invoices, picking statements, but here he was committing this fraud, being assisted by other managerial staff that were in the approving position. The operational manager would approve. The internal audit is available and would check this center every month and produce a report, which we are unable to see anyway. But you will see that there is form of collusion in this kind of fraud. The board would insist that fraud cannot take place in the organization, and it has never taken place until this breakup, where we are able to discover that much of the money was lost. The bigger problem is that the organization's operations were seriously affected. The petrol stations actually have never remained the same because the operations were affected, the turnover was affected. So even other people would lose jobs, not simply because the organization has failed, but because this fraud has affected the ability of the organization to continue operating. So fraud can occur from any angle. Whether someone is living beyond his means or his lifestyle is depicting to be more than he's earning, but even those who are least expected have actually committed fraud. So that's case number one. Case number two was another interesting one. It involved a trader. This was an illiterate trader, never went so much to school, but God blessed her with the money and she was able to start a hardware store, big hardware store. And the staff, together with a large group of a bank in Africa here. This bank is almost in every country. So the staff and the bank defrauded this trader. Very interesting. When the case evolved, it was a very interesting case. The staff member was also semi-illiterate, an offloader or a loader. That's what the work was doing at the store. But the owner of the store developed trust in this young man and would send him sometimes to bank money for this trader. So what the young man would do, when you send him to bank like 8 million, for example, he would write a deposit slip for 800,000 and leave some gaps in between the wordings and the figures, which would later fill up to complete the 80 million that he picked from the store. Surprisingly, the bank staff would clear the deposit slip of the 800,000, stamp it normally, and actually post 800,000 onto the banker account. Then this staff member would now fill in the missing zeros and fill in the other words and present a fully executed deposit slip to the trader, who would be comfortable that the man has reached the bank. We don't know that what used to happen thereafter. Maybe this banker staff would meet with the trader staff and they share their loot. Whether it was the staff only and the bank staff was naive, but this was later when we discovered he was a very experienced banking officer. So we suspect maybe he was part of the scam. So checks would be issued by the trader and they would be cleared by the bank on the grounds, again in courts, that you are our good customer, we wouldn't want your check to bounce, so we facilitate the clearing of the check and you will pay us later. So the funds accumulated into unauthorized overdrafts on the bank side. The bank would earn interest on it. The bank would earn later bounce the check charges from this trader. So this scam was revealed the day the trader walks to the bank to withdraw hard cash with a half full executed check, expecting to get hard cash from the bank, and the bank tells her, you have no funds. What is on the account is insufficient. And the trader says, according to my books and the way I've been depositing money, I expect money to be available. But the bank officials told her, you have no sufficient funds, so we can't cash this check. So the issue rose from there. The trader approached her lawyer. The lawyer, they instituted a case, then he called us in for the investigations. We requested for the bank statements from the bank, and we did the job. Finally, we discovered these depot slips were all available. We looked at what the trader had. We asked for the bank, from the bank, what copies they had. They tried to resist. The court order was obtained. We received those depot slips, and there were these huge variances between the funds that were deposited. To cut the story short in the interest of time, we concluded the case with around 1.9 billion shillings that would translate in around $951,430. Huge amount of money that actually had been pushed under the table by the bank and the staff. The final results of this case was that the staff was sentenced, he could not compensate or give the money, but the bank was forced to refund this money to the trader. The trader was happy, money was recovered, but in terms of liquidity, in terms of working capital, the store had to suffer. This was, of course, in addition to the interest that the bank awarded, the court awarded the trader, and the damages. Again, a lesson to pick from here. This was the bank official, together conniving with a staff of the trader to defraud this trader. The least expected staff, because this trader had cashiers, he had managers in the organization, but he would not trust them, but would trust this loader, stroke of loader. A semi-illiterate staff was committing the fraud. You do not expect that he would do it. Why? His lifestyle remained normal. He remained doing offloading and loading. A normal guy, walking, layman completely, if you do want to say. But still, he committed a fraud and he was there taking the money. For those who are in internal audit and you are part of this webinar, the managers who are part of this webinar, the investigators that are part of this webinar, we need to know that not only those that live above their normal that are likely to be committing fraud, but we also need to check on those who actually pretend to be living below their normal, to be the very innocent, the poorest in the organization, ever footing. The footing is actually a scheme to try and conceal the fraud that they are committing. So you need to check those ones also. The third case, which I want to quickly go through, was an aborted case. This case involved a hotel and a staff. A staff was being pushed at the wall for defrauding 185 million, which is approximately 52,000 shillings, $52,000. And we are called in. The internal auditor had already issued their report, and we are all committing this staff to have stolen the money. Surprisingly, the staff had even signed a consent document that he had taken the money and he was going to pay back in installments. When we are called in, we started our job from the scratch, not believing the internal audit reports and all other things. We sought to interview some directors in the organization, some senior managers that were responsible for supervising the staff. To our surprise, we were limited from approaching some of those. There are people that we couldn't interview. We are told that those ones don't interview them, they are not part of this. But according to us, we felt we needed to interview them to get the background of this matter. We are denied access to those individuals. There was a banking officer who was responsible for picking money from the cashier and depositing it to the bank. We are denied access to that banking officer. We wanted to obtain bank statements directly from the bank. We were denied authorization. We didn't get the access to the bank. The system suppliers, the vendors that were supplying the system that these people are using to manage the hotel, Again, we were denied access to the system. We were told the system collapsed around 3 to 4 years ago. So the data there cannot be obtained again. We said, fine, can we talk to the vendors to see if they can give us backups from this system? We are told the vendors couldn't be approached. So we concluded that senior management was part of this fraud. We also concluded that fraud was more than was being presented, and we aborted the engagement, refunded the deposit that they had given us, and we told them we are not undertaking the job. What are we trying to pick from here? That management can be involved in fraud. The same management appointing you to investigate a particular case may actually be part of the fraud, and they want you to issue a report that covers up much of the fraud. We suspected that the 183 million that they wanted this younger man to commit to, and even commit to be paying back in installment, then it is possible that could have been a cover-up of millions of dollars, which would be covered up by this court case and an audit report, so that management within themselves could quickly solicit this money and pay back, clean their name, and get the other big amount of money buried. Fearing to be used as rubber stamps, we aborted the case and ended there. But we can see that the staff was below, fine. We are watching management wanting to investigate this fraud and commit a staff member to courts of law, but not willing to execute the engagement beyond what they would expect us to do. So those are some of the cases. I would want to answer some questions as we move on, if participants have some. Thank you. Back to you, Bonafred.
Thank you very much, Mr. Musabe. Those are very interesting cases that are coming out, and one of the things that I'm getting to hear is the emphasis on even those that their lifestyle could not be audited were the ones that were really involved in it. But let me allow Susan right now to give us some of the experiences right here in Kenya of the ones that she has experienced, the clients that the investigations that she has had experience with. Susan, if you can hear me, are you there? You can pick it up from here. Hi, Susan, can you hear me?
Yes, I can hear you.
Great, great, great. So maybe you can give us a few cases of some of the investigations you've carried out right here in the country, in Kenya, now that we've heard from Uganda. Up to you.
Yes, I've heard from Uganda, and very huge sums of money which have been lost. So just to dive into it, in Kenya, also we have many fraud cases, but since we have many small and medium-sized enterprises, you may find that these cases are not actually followed up. The staff may just be released and the case will just die down because of reputational risks that the management feel this information should not go out. So just as my first case that I actually investigated within the firm was regards to a SACCO. Again, we will not mention the name of the SACCO. And a SACCO, I can assume that if not all of us, majority of us are part of a SACCO. And we all know how the SACCO operates. We have our contributions, which can go either to your deposits or savings, or they can go towards the share capital. And then in turn, you can request for a loan and be issued a loan based on your deposits. But also there are some SACCOs who operate on two levels. They have the FOSA and they have the BOSA. Now the FOSA is the front office service activity and the BOSA is the back office service activity. Now if the SACCO operates both, then it means the front office service activity is it's like how the bank operates, where you can go open a current account, make deposits, make withdrawals as and when you need the money. So in this instance, what had happened, once you go to the SACCO, there's a registrar who is in charge of activating your account details once you open an account. And then after that, there'll be another person, a senior person, who will authorize now the account opening, and then the transactions will go on from there. So in this particular case, they were very clever staff who used to use the registrar's system. They would enter using her password and then input details into the deposits. So the registrar was in charge of putting M-Pesa deposits into the members' accounts. And after that, the teller at the account is the one who's going to approve the transaction to go through. So the modes of transaction, let me just go back a bit. The modes of transaction for the SACCO was either by cash, by check, or by M-Pesa. And since now we have M-Pesa in place, many of us will do the transactions via M-Pesa, and the ones who have huge transactions will opt to do them by checks. So for this particular case, the staff member, the clever staff member, would wait for the registrar to, during lunch hour break, she will leave to go out for lunch. The member will come in, the staff will come in, directly deposit money into member accounts. And the member accounts that are being deposited the money to were dormant member accounts. So once you deposit the money into a dormant account, it is reactivated in the system. So once that is done, the funds are deposited into the accounts, and after a week or so, the funds are withdrawn. The other issue that we found out was check deposits were being done. So check deposits can be done through two ways. One way, if the customer directly deposits the money to the account and brings the check deposit to the SACCO, or deposits or drops the check to the SACCO, and then the accountant will again go and deposit the check to the bank. So we found there are instances whereby checks were being deposited into customer accounts. And just remember, it is dormant customer accounts and very specific accounts. And then after 2 or 3 weeks, the funds are withdrawn. So when we were called in, we went through thorough checks, and we found out that the deposits that were being done by M-Pesa were not in the M-Pesa statement. Check deposits being done by the customers are not in the bank statement. Bank deposits being recorded by the accountant are nowhere to be seen. No deposit slips are there. The cash receipts that are supposed to be given to the customers when they come in to deposit the money, some of them are being done manually, and the receipts book were actually missing. So in total, the SACCO may have lost 2.4 million. And just to put it into concept, the period under which we did this investigation was only 6 months, but they may have lost 2.4 million. So what happened during all this process? So the lapse of controls that we actually noted was that in the system, once you're issued with an ID, you have your system ID in place. So we were able to track all transactions done by every employee. And we also found the rights that every employee was actually being given. At the end of that exercise, we noticed that the rights were not restricted. That's the registrar's rights. She was able to post, and she was also able to activate, post, and approve any transaction that happened. And that's why the M-Pesa deposit that she was putting in the system could go through and actually reflect at the teller that actually this member account has some funds. Now, once the member comes after every 2-3 weeks, done the withdrawal, then definitely you will just give the money because there's funds in the accounts. And same also to the bank deposits that were actually done. There was lack of controls in the system. So as you have earlier, I've heard Joshua mention about the IT controls. So also this is a point whereby the usernames, the audit trail that is in the system should be checked frequently, maybe once or twice a year, just doing spot checks to ensure that everyone has specific rights and that's the only item that they actually can control. Again, to do with the banks, what we found out that the bank reconciliations were not being checked or approved by a senior personnel. This is a very common area that we normally find, and some accountants may feel that it's not a must that we have these bank reconciliations to be approved or to be signed by a senior personnel due to the lean staff capacity that is there. I, as the accountant, I'm the only one who can check, I'm the only one who can perform, I'm the only one who can approve. But you still have a senior personnel. So it is just imperative that the senior personnel approves and actually check that the bank reconciliations have been properly done. So in total, as I mentioned, the SACCO may have lost 2.4 million shillings, that is 24,000 US dollars in a span of 6 months. So that was the scope of our investigation. We may not have known how much more have already been lost since M-Pesa reconciliations were not done, bank reconciliations were not being done. So we cannot be able to, we're not in a position to actually know the extent of the fraud. However, due to the sensitive issue of being a SACCO, definitely this story cannot go out. If the members know, we all know what happens if such kind of fraud of a SACCO comes out, such kind of a story. Members will opt to remove their funds, and that will lead to the downfall of the SACCO. So the management decided to handle the case internally. And from that point, as we disengaged from that since they decided to do the case internally. So the second case that I would like to mention was of a school. And in this school, there was a very creative accountant, and the accounts that were actually being manipulated was in relation to the pocket money, caution money, and excess fees. As we all know, we all went through high school. Once you clear your high school and you made the clearance, a letter, all of it has been signed, you're entitled to get back your caution money, entitled to directly transferred to you, and you also get pocket money. So in this instance, this creative accountant, what he used to do was he wrote letters requesting for the withdrawal of the pocket money, the caution money. And since he was part of the accounts department, his main role was to write the checks, ensure supporting documents are all attached, post the check to the system with the details of the student, document the check number to the check outward book. And then after that, there's another accountant who was tasked with the procedure of ensuring that all documents are well arranged, they're all there, well supported, the payment voucher is there, and the check also is appended. After that, the finance manager also will be in charge of confirming everything is okay and amending and also appending the signature on the check. So the finance manager had the first signature on the check. Then all of it will be taken to the principal, and the principal will make the final approval for the payment to be done. And then all those documents will be taken back to the accounts office. So the second accountant will be the one in charge of releasing the checks. And once the checks are released, the people who come to pick up the checks, they must append their signature showing that I picked the check on this and this date. This is my number, my ID number, my telephone number, and my name. So in this instance, the creative accountant, what he used to do, he ensured that the funds that are actually being manipulated were 7,000, 8,000, and 9,000. So what he used to do, after the documents come back to the accounts office, he will go and change the check number. He'll go pick up the check and change. So the 7,000 will become 70, the 8,000 will become 80, the 9,000 will become 90. And then he'll also go to the check counterfoil and change the check counterfoil. He'll go to the system and change in the system. And surprisingly, the supporting document will be plucked out from the file and they'll no longer be there. So what raised the red flag was, in one instance, the bank reconciliations were being performed. The staff was not in the school. He had gone, or he had requested for an off. He was not in the school, and the bank reconciliations were being done. So when they are being approved, according to the bank statement, 70,000 has been deducted from the bank account. But what happens when you go back to the cash book and to the supporting document? It reads 7,000. So that's where the red flag came in, and the financial manager actually requested the bank to send them the scanned copy of the check, because for her, she was saying, according to our records, you're having 7,000. So the bank actually sent the scanned copy of the check, and indeed 70,000 was what was on the check. Check counterfoil list reads 70,000, but according to the cash book and the supporting documents, it is 7,000. And that's now we are called for the investigation. The investigation was for a period of 10 months, only 10 months, but the amount that the school may have lost was almost 2 million shillings, and that amounted maybe to 20,000 US dollars if you convert using the 100 rate. So here, as you can see, it's just a youthful person who maybe wants a lavish lifestyle and wants also to finance it. And what is the only way to finance? Because you cannot finance it using your salary. So you find clever ways of circumventing through the controls so that you can benefit from it. Maybe he started with only one item. One day he decided, let me just try and see if this thing can actually be detected. But he continued with it because he saw, yes, I can get more money through this, so let me continue. And the funny thing about it was that whoever the account numbers that were being deposited these checks, whoever was cashing out these checks were not directly linked to him. No money went to his bank account. He was a very clever person. No money went to his bank account. All monies went to different accounts, and you were unable to actually link him and all those other people that cashed out their accounts. So in the process, the case went to court, but knowing our legal system, it is still in court and it has been dragging in court, and just hopefully that maybe one day it is going to be finished. But the lesson to learn here also is that we should be vigilant and also check the lifestyle that we are living, our friends and colleagues who are in the office, in their lifestyles, how they are actually managing, and the other issues also on system controls. We can mention that the manual controls are sufficient, but system controls. And that's why we normally advise our clients to actually perform IT audits once in a while, just to ensure that the system is actually, the controls that are there in the system are working as intended. And also, I just like to pose a question to all of us. Whose responsibility is it to ensure that fraud is actually prevented? So I can just say external auditors, internal auditors, management, and management covers an array of people, also the board of directors, the shareholders, the staff, internal audit and investigation parties. We all have our main responsibilities. So before I finish, I just like us to ponder over that question. Who is responsible? And what are our responsibilities? Now I can welcome any questions that participants may have. Thank you.
Great.
Back to you, Fred. Sorry.
All right. Thank you very much, Susan. That's interesting cases that we are getting to know and to hear about. Yes, and without any further ado, I would like to open the floor for questions, and I'm pretty sure that our panelists will be ready with answers like this. So for now, as if you want to ask a question, you can use the raise your hand button to ask a question. We will see it and give you a chance. And because somehow I already have a few questions of those that I've sent into the Q&A, we are answering them privately, but I also believe it's important for these questions to be raised because many of us experience such matters here and again and again. So my machine here is a bit great. So maybe the floor, and if you have any questions, you can raise them up. Yeah, one of the things I like from what I'm hearing is the questions that are coming up, like what Susan is asking, whose responsibility it is. Is it to ensure that the internal controls are taken care of? Good. Mr. James was ready to answer some question here. CPA James, do you want to just read the question out and respond to it, the one that you just answered in the Q&A?
The ones I've just answered?
Yeah, the one that you've just answered.
There was one which was about internal controls.
Yes, yes.
Internal controls are key to fraud detection, deterrence. But there is a saying that controls make a fraudster change their method. In this case, how do we manage fraud deterrence and prevention? The answer is that you should keep reviewing these internal controls, adapting and changing as time passes by. It is a fact that as you think of locking your door, the thief outside there is planning on how to cut the big lock that you are putting on that door. So as you then go to sleep, don't rest thinking your lock is so big and nobody can cut it. This thief may now come with gas and will end up melting your lock. So keep reviewing these internal controls. Do both internal assessment of your internal controls and also call in external parties to assist you in assessing the internal controls. The beauty with the external assessments, the external consultant will drop the brick on the table as it is. Because he's not responsible for your internal control, he will clearly tell you it is weak here and there. But sometimes the controls assessed internally, some of the assessors will also have their links with the managers responsible for those controls, and things may not come out as expected. Who does the internal assessment? It is the internal auditor. I gave you an example. In one of the cases where the internal auditor was actually an accomplice, he was a beneficiary of the loot. So would you expect him to tell you that the internal controls are not good? That you lock the door for the flow towards his pocket? Definitely not. So you may need to put in the external people. The other interesting question was, what are the key areas you need to check when doing a lifestyle audit, when investigating a staff member for fraud? Most of the staff members will make sure that the assets are not in their names. They will get this money and want to hide it in assets. So please look at the assets. First of all, key the stamp duty, where these assets are changing names. You'd want to see who paid. If they are in their names, try to relate those assets to their earnings. Of course, there is the others who will put the assets in their wives' names, the spouses. Check those assets which are in the spouse's name and relate the incomes, the earnings of the spouse with the likely ability to earn these assets. I'll tell you one of the cases where we investigated, and it was so sweet that the people planned it. The wife, the fraudster put the assets in the name of the wife. When we cornered the fraudster about the earnings and the wife's inability to earn the money to buy such a property, they quickly thought of a scheme with their lawyer. where the wife had to say that he had a concubine, he had another extramarital affair with a rich man who was giving her money to buy the asset. And because the husband was also involved, he believed it. He said, yes, I've always suspected that my wife actually had extramarital affairs with this man. Can you imagine? Now, that's the extent they would go to try and justify that the asset actually belongs to the wife. The husband was the kind of rubber stamping, that he was aware of the marital affairs. All those are possible. Another one told us he was getting his money from below the waters, under the lake. But we asked the lawyer to ask the person to tell us, to take us to the point where he used to dive into the waters to get his extra money from underground. And of course, could he take us to dive in the water? He wouldn't dive there. So we concluded that he was extra. Another area to look at, weddings. When you attend the wedding meetings, where you expect that this staff member is likely to be contributing towards the fundraising, at that point, they tend to give in a lot of money, and you are able to know that this person is offering beyond his or her means. You go where one says that all the drinks and the food at the wedding party is on me. He's offering that money. Really, where does this money come from? We'll be interested in knowing. Those are other good areas they want to see such a kind of stuff. Of course, other areas are cars, but the cars, they're a little bit tricky because these fraudsters tend not to transfer the cars into their names. They leave them in the names of the vendor and they drive the car until it is old. But those are other areas to be looking for. Thank you. Back to you, Fred. Hello. Fred, are you there? Pick up from Fred.
Thank you, James. I think we can proceed on to the next question, which has been asked by Bedford Ochola, who is responsible for fraud detection and prevention. Maybe we can have Susan answer that.
Okay, that is a very interesting question. And as I had earlier asked, so we are all responsible for fraud. I can speak for external auditors. For us, we are guided by ISA 240, which states that the responsibility, which gives us statements relating to fraud. And then we have ISA 315 and ISA 330, which also assist us. They give us the guidelines that we should actually follow in relation to the audit of financial statements in relation to fraud. But also senior management have a responsibility towards fraud. They're the ones responsible for ensuring that the internal controls are actually there, the risks are noted, and the controls to mitigate those risks are actually applied. And what are, as I can say for the staff, what is the staff responsibility towards fraud? By the staff, for the staff is just understanding the internal controls that are there, see what you do in a day-to-day basis are affected by the controls that are there, and also just to be aware. So management also have to ensure that staff are actually trained on a day-to-day basis, maybe twice or 3 times a year, so that they can actually see the red flags. They can actually understand and come to notice the red flags that are there that will tell them something is not right here and this may be a fraud issue. But the major thing that I can actually say that will maybe prevent is the tone at the top. The board of directors, what is the tolerance to fraud? Is it that it is within their risk rating that they say this we can absorb, or it is not tolerated completely. If you're caught, the specific employee will be taken to court, you will be jailed, and you'll have to pay, all responsible in our different ways. So it's just a matter of understanding what is our role in the organization, the controls that are put in place, what is our role to ensure that these controls are actually there, and also to management. People who are in management, who are in this training, also ensure that the staff who are there, they know the controls that are there, they understand. So, and also trainings also assist very much. If you conduct 2 trainings in a year on fraud, the staff may actually they may be aware of what to mention or what to highlight to the management. And also it's also very good to have a whistleblowing policy such that if a staff notice something is not right in any particular department, they can anonymously disclose it to management, and management may take effect on that. So it doesn't necessarily mean that the fraud that is detected should be as and when a third party comes into the organization. It can be deterred within the organization before it is actually causes huge implications. I don't know if I've managed to answer that question correctly.
Bedford, have we been able to satisfy your question? Okay, I think let's move on to in the interest of time, let's move on to the last question. Then the rest of the questions will be answered directly to your emails as you have registered. So from Jeremiah Mwale, what are the key areas you need to check when doing a lifestyle audit when investigating a staff member for fraud?
Yeah, Podcast, I think that question was addressed.
Oh, it has been addressed. Okay.
Yes.
Okay. Well, I think we have come to the end of the session. In case there are any other pending questions, we will be happy to answer them through direct mails. But as of now, I think we are done. And thank you for attending. Have a great day ahead.
Thank you.